Here is the overview of today's gold market news. Gold price performance, price trends, and technical outlook. Gold finds tailwind in Fed pivot hopes and dollar weakness despite rising risk appetite. Central banks ramp up gold purchases amid global shift from dollar reserves. Gold loses shine as US-China trade deal and Middle East ceasefire calm markets. Here is the latest gold price performance, price trends, and technical outlook. Spot gold dropped sharply on Friday close to 2%, hitting a low of $3,256.23 per ounce during the morning session. By midday, losses narrowed slightly, with spot gold trading at $3,272.55, still down around 1.6%. Meanwhile, U.S. gold futures fell by 2%, reaching $3,279.20 per ounce in New York trading. These declines reflect a broad market shift away from safe haven assets as global risk sentiment improves. The price drop on Friday pushed gold to a 3% weekly loss, marking its second straight week in decline. The recent downward trend suggests a reversal in the strong upward momentum gold experienced earlier in the year. This is primarily due to reduced geopolitical risks and improving global trade outlooks, which reduce the need for hedging with gold. Despite recent volatility and losses, gold remains strong, up more than 25% year to date. The metal is still about $200, short of its all-time high, which was set in April 2025, indicating underlying bullish momentum. This long-term strength reflects ongoing support from macroeconomic drivers, including monetary policy and central bank behavior. Moving on. Here is how gold finds tailwind in Federal Reserve pivot hopes and dollar weakness despite rising risk appetite. Gold prices have been buoyed by expectations of interest rate cuts from the U.S. Federal Reserve. In response, traders increased their bets that the Fed will cut interest rates by 75 basis points in 2025, a move that would likely boost gold prices in the medium term. A Wall Street Journal report suggested Trump is considering an early announcement on a new Federal Reserve chair, replacing Jerome Powell, whose term ends next May. This added uncertainty around U.S. monetary policy contributed to dollar weakness. Weak economic data released last Friday strengthened the case for Federal Reserve rate cuts. The released U.S. economic data indicated an unexpected decline in consumer spending in May and a moderate increase in inflation, suggesting economic cooling. These indicators support the case for the Federal Reserve to ease monetary policy in the coming months. Since gold does not yield interest, lower interest rates reduce the opportunity cost of holding it, making it more attractive to investors. Equity markets had rose Friday morning, weakening gold's appeal as a safe haven asset as investors shifted capital toward risk assets amid improved trade relations and eased geopolitical concerns. Moving on, here are the latest update on central banks ramping up gold purchases amid global shift from dollar reserves. One of the key pillars of gold's strong 2025 performance has been robust central bank demand, particularly from emerging markets and commodity-based economies looking to diversify reserves away from U.S. dollar reserves towards financial sovereignty. Among the largest demand are from the National Bank of Poland that added approximately 49 tons in Q1 2025, pushing total gold reserves to 497 tons, or approximately 21% of total reserves. The People's Bank of China had acquired approximately 28 to 13 tons in Q1 2025, with official reserves at over 2,290 tons, or 6% of reserves. The Reserve Bank of India had purchased approximately 18 tons in first quarter of 2025, with total reserves about 880 tons, or 12% share of total reserves. Next, here are the reasons why gold loses shine as US-China trade deal and Middle East ceasefire calm markets. On Thursday evening, the US and China agreed on the framework of a new trade deal, signaling a possible resolution to ongoing tensions. Trump had issued a statement during a White House briefing on Thursday, in quote, "We just signed with China yesterday," though no further details were given. Commerce Secretary Howard Lutnick indicated plans to reach deals with other major trade partners, further boosting investor confidence. The improved relations had reduced market fears over trade dispute, diminished safe haven demand, and boosted investor confidence and shifted capital toward riskier assets, such as equities, pulling money out of gold. Earlier in the week, a ceasefire agreement between Iran and Israel had already contributed to declining safe haven buying. The combination of these events significantly dampened fears of geopolitical instability, undermining gold's appeal as a protective asset. Analysts explained that the easing geopolitical landscape has provided an opportunity for investors to take profits. Without the immediate threat of escalation in China or the Middle East, investors are less inclined to hold large gold positions, especially after its strong rally earlier in the year.